Hello and welcome to an FXTimes daily market recap. I'm your fundamental market analyst, Nick Nassad. Today is Monday, March 22nd, 2010. We had an interesting start to this week's trading, as overnight we had continued uncertainty regarding what will happen with Greece and European Union leaders. We finished off last week with the euro sliding in the second half of the week after testing the 1.38 level, and we had set up around 1.35 prior to our close for the weekend. However, over the weekend we had the German Chancellor Angela Merkel say that the EU leaders should not create any illusions for the markets by building expectations for Greek aid. That caused the euro to slide below the 1.35 level for the first time since back in March 2nd, and we hit a low around 1.3460 as we had some contradictory claims made by the EU leaders. Greece is seeking help before 20 billion euros of its debt matures in the next 2 months, meaning that it has to roll over that debt and finance it through the markets. However, the prices are really high right now as there continues to be this uncertainty. So it's a Greek officials are saying that the credibility of the Eurozone is on the line in this, but there is reluctance from Germany to follow any kind of bailout plan as it would pay the lion's share of any bailout. France and others believe that this should be a solution should be based from the EU, while Greece said that it will go to the IMF if necessary. So today's low tests some of our lows we had seen in late February around 1.3460, but as you can see we did rebound from there, and we moved back to the 1.3525 area as we had some other comments coming out of New York trading, including the head of the Euro group, Juncker, encouraging that the EU members should fall in line with some kind of bailout package that should originate from the EU. So again, just continued uncertainty regarding the situation, and that has pressured the euro to start this week. Against the yen, we see that the euro-yen pair fell sharply in today's trading as a result of the uncertainty, breaking below this 122.20 area. And that is the lowest. Today's low around 121 was the lowest we've seen since March 5th. So we had a rise in optimism regarding the euro in early March, as it seemed like we might have some kind of bailout package agreed to, but with those talks breaking down, mainly on Germany's insistence, we have seen the euro slide in the aftermath. The yen was also much stronger today as we had general risk aversion in the currency markets and in financial markets following Friday's increase in interest rates by the Reserve Bank of India. That increase raised speculation that other robust emerging markets, especially those in Asia, will try to follow suit, which could dampen demand for commodities and slow overall global growth. In a look at our chart of gold versus the dollar, we see that in today we plunged below the 1,100 level, which was the lowest we have seen gold since February 25th. We can see the sharp reaction in gold in Friday's session following the Reserve Bank of India announcement that you could see here, and we extended those losses in today's trading. So what does that mean? If we take a look at some of our commodity currencies, we saw a decline in their value overnight. We'll pull up the Aussie versus the US dollar, and we see that to start this week's trading we fell below the 0.91 level, which was our low from last week. But we didn't dip much further than that, and as we had some rebound in New York equities in the early morning trading up until noontime New York, which is when this video is being recorded, we did see a bounce back, and we're actually back to the levels we had been at prior to our open. Though gold didn't retrace all of its losses, we did see oil prices substantially reduce the losses they had overnight. It was down almost 2% before New York trading, but now at 12 noon, we saw oil down only about 0.4%. So that has helped this rise in risk appetite for commodity currencies. So let's take a look at our second currency, which is a US dollar Canadian dollar pair. And we see a similar situation here in that we rose in favor of the dollar in overnight trading and in the beginning of New York trading, but after hitting some resistance here around 1.0240, we have paired some of our initial losses. So this is our resistance level currently. Despite the rise in favor of the greenback in this pair to start the week, the Canadian dollar remains rather supported as it looks set to reach parity with the US dollar, as we have a recovery in Canada that is gathering pace, and the Bank of Canada is set to raise rates well before the Federal Reserve will. So unless we have a very big wave of risk aversion and a big slide in commodities, then we shouldn't expect the Canadian dollar to slide that much further against the greenback. The US dollar Japanese dollar, meanwhile, remains within this range we've seen the last 10 sessions or so. We did hit a high near 90.70, and then from there we slid and rather sharply in the beginning of New York trading, hitting a low around 89.90. So we have seen buying pressure for this pair around the 89.90 level. We'll see if we test that again later in today's session, or perhaps in the following sessions this week. Now, taking a look at the Australian dollar against the Japanese yen, we see again that we moved in favor of the yen on risk aversion, and the safe haven appeal of the yen is rather strong to start this week. However, we paired a good amount of those gains in the New York session, but though we did break below this rather important 82.30 level, we had set that up as resistance earlier, but then we broke below and it had been support, so now we moved below it again. So it is a power line to watch in that it can switch its role from support to resistance, and we'll see if we move back above it in the rest of today's trading. Just a final pair here, we're looking at sterling, and we see that the pound rose against the dollar in today's trading. So we did not see a very steep decline here, even though the pound is one of our higher yielding risk that moves up when we have risk appetite, and even though we had risk aversion, we didn't really slide much further. That could be the fact that we had a rather sharp slide in Friday's session, and now we're just retracing some of those losses here. But the fact that we didn't move much below 1.4930 is a good sign for the pound, and we'll see how it behaves as we go along here in the beginning of the week. So that'll do it for today's market highlights. So let's see what fundamental events we can look forward to for tomorrow's global session. Overnight, the UK has 3 releases, including consumer prices, a measure of mortgage approvals, and the CBI Distributive Trade Survey, which is a measure of retail sales. Tomorrow at 8:30 we have the Canadian Leading Index, and that'll be followed at 10 a.m. Eastern by U.S. existing home sales, housing prices, and the Richmond Manufacturing Index. And that will do it for our broadcast for today. For more news, videos, and analysis, please visit FXTimes.com. I want to thank you for watching and wish you good trading.